I've been very fortunate to be able to witness and participate in some of the major changes, era changes for investors, beginning with the individual investor revolution when I first started out. And I started at CNBC in 1993 on the air, and in 94 went down to the floor of the New York Stock Exchange and brought cameras into what had been a very much closed club for a certain group of people. Opening that up was, I think, a game changer in many regards. The internet revolution, where there was an explosion of information, was a game changer for investors because it empowered them to believe that they could look at their own financial life and get a handle on it. And so the individual investor was the first major theme that I witnessed and participated in. Next one probably was globalization. One thing happens in one corner of the world, and it impacts things all over the world. And I think globalization has been an extraordinary change for investors, for business, enabling very positive things, and also it brought about the realization that when one thing happens in one part of the world, it has major ripple effects. So we are all interconnected. Another major trend that I witnessed, of course, was the dot-com boom. You know, it was funny. We just went through this period where we threw out all fundamentals, and it didn't matter if, you know, the company had very little revenue, no earnings. If it had a .com on the end of its name, people thought it was really valuable. Then the internet bust, where valuations plummeted, and you had people who thought investing in the stock market and getting rich overnight was actually a reality come back down to earth and recognize that fundamentals do in fact matter. Then we had a change in the growth in the world and the idea that other nations are very important, as much as America is important, because America, of course, is the largest economy. But you saw growth in China and growth in India, and this wave toward, you know, the East and the West weakening. So that brought about an enormous bull market in oil. And again, another bubble where, you know, oil prices hit $147 a barrel. And of course, Goldman Sachs came out with a report saying it's going to 200, when in fact it went all the way down to 32. So again, we got lost in this bubble mania as oil prices went up. And then, of course, the biggest that we are all still talking about and still witnessing and unfortunately experiencing is the housing boom and bust, where, you know, housing prices skyrocketed really for no reason other than an urgency to get into the market. You know, you pick any area of the country, Phoenix, housing prices up 40% year over year. In 2006, was there any real reason that the average home in Phoenix went up 40% in price? Was the school district any different? Was the infrastructure any different? No. Nothing really happened to change anything fundamentally to support that price increase. And yet, we all bought into it. And we all thought, well, you know, housing prices are going up because they're going up. And I've got to get into this market now. There's an urgency. And of course, then that busted and began what was the worst financial upset ever. Arguably ever. Some people say in a generation, I would say ever. And so then the banking crisis ensued. And of course, that was extraordinary. So there have been there's been a tremendous amount of change in the investor climate, in the business world, that I have been fortunately having a front row seat to. So I feel privileged. Join me on genConnect.com.